Welcome to Barchart's series of educational webinars. Today's session, Investing 101, Investment Selection Criteria and Winning Exit Strategies. At first start, the art of investing can be intimidating. Where to begin and the screening process. Choosing the right mix of equities that might be overwhelming to the novice or the new to investment world. And even after choosing a diverse portfolio, many investors underachieve because they fail to exit from losing stocks or the ones that are underperforming. Now, the key to a successful investing is having a plan. And all successful investors follow their plan with discipline and without hesitation. Today's webinar is a unique one because I've invited a man with a plan, a successful investor of many decades, Jim Van Meerten. And Jim has a remarkably simple and easy plan to understand. So stick around as we explore the idea behind investing, one man's plan for success, and show you how Barchart can bring you one step closer to achieving your investment plan success. Hello, everyone. My name is John Rowland, Barchart's Senior Market Strategist, and today we are fortunate to have a special guest, respected member of the investment community, Jim Van Meerten. Now, before we bring Jim on, I want to put out forth a couple thoughts. Those of you who are new or are looking for investment ideas, pay attention to the big picture, the methodology today's discussion, and don't get caught up in the logistics. For instance, talk about custom views or templates or other tools at Barchart. At the end of our session, I will be sharing with you where you can find tutorials on how to create and use these tools, as well as where to access the slides from today's sessions outlining Jim's methodology and the inputs he uses in the aforementioned tools. Instead, concentrate on the process, the simple system of selection and exiting stocks. And like all of our webinars, they are recorded and are free to be reviewed. Now, to help me with today's session is my partner and our moderator, Barchart's Project Director, Gene Baker. Hello, Gene.
Hi, John. How are you?
I am fine, and how are you today?
I'm great. Really looking forward to hearing what both of you have to tell everybody today. And I just want to remind everybody that you may have a lot of questions, so feel free to pass them through. As moderator today, I'm going to be sending questions over to John and Jim. So keep me busy, okay?
Yeah, let's keep Gene busy today. All right. Ready to get started then, Gene?
Oh, yeah. Let's go.
So just a reminder that today is for educational purposes only, and decisions to buy, sell, hold, or trading securities, commodities, or other investments involves risk and best made on the advice of qualified financial professionals. No circumstances shall we be liable for any losses or damage you or anyone incurs as a result of any trading investment activity that you or anyone else engages in, based on the information or material you receive through barchart.com and or our services. Now, I want to add one additional note to this disclaimer. Jim will be sharing a number of individual equities that he may or may not currently own. And this session should not be considered an endorsement to buy or sell any of these securities on the part of myself, Barchart, or Jim Van Meerten. Okay, so that's just a little business that we need to take care of. So without further ado, my guest is Barchart's contributor and creator of Barchart's Chart of the Day, and has been an active investor for over 4 decades, and has been recognized as a top portfolio manager among his peers. So please welcome Jim Van Meerten.
Good afternoon, John. Thank you for having me on this webinar.
Jim, it's all my pleasure, trust me.
Looking forward to it.
All right. So, Jim, let's just jump right into this because, well, actually, let me show a little slide here. This is Jim and I at a recent gathering. I forget where this was. Was this the old folks gathering? I can't remember. Old traders gathering we went to?
Yeah, we were at Lake Norman, I believe.
Yeah, I think you're right. I think you're right on that one. Okay, Jim, let's jump right into it. And I know you have a unique perspective in terms about investing. You want to share that?
Well, investing is kind of like it's custom tailored to each individual. Now, picture if about 10 of us went to a restaurant. John's probably more healthy, and he'd probably order some grilled salmon. I don't care anymore. I would order a steak with a loaded baked potato. Somebody else will order a salad because they're on a diet. Nobody is right or wrong at a restaurant when they order food. It's what is your custom taste, what fits your personal needs at the time. And investing is the same way. You need to first ask yourself, why am I investing? Am I investing for a long-term retirement, investing postponed consumption? What am I doing? And just like you have your favorite dish when you go to a restaurant, investors have their favorite investment. You might be there like me. I look at price movements. Other people may look for increasing revenue, earnings. Some of my friends, they don't care about anything but dividends. Other people are value investors. So the first thing you need to do is ask yourself, why am I investing? And what type of investments am I comfortable with? Just to give you an example, I think you ought to start out with having your own mission statement, what you're expecting from your investments. Now, my own mission statement is kind of a 3-point, very simple, and that is I'm 75 years old and living off of my nest egg. So, number one, for me, is preservation of the principal. I'm older and can't afford to lose money, so preservation of principal. The second is, since I'm living off of my portfolio, I need an annual rate of return that exceeds my withdrawal rate plus inflation. So right now, my withdrawal rate is about 6%, and inflation has been recently around 6%. So the goal of my portfolio is to have a total return of about 12%. Now, I can do that almost by using a passive income of ETFs like the S&P 500 or the NASDAQ 100. But I want to add to it enough risk that I exceed the rate of return of the market by about 2%. Now, if I went to Morningstar and I just looked over the last 10 years, the rate of return on the S&P 500 ETF and the NASDAQ 100 ETF, one of the S&P 500 was about 12.36% annual rate of return, and the triple Q was 17.69. So if I just had a blended mix of the two, I would have returned 15.02% over that 10-year period without doing anything. But
So,
I
Jim,
think I'd like to beat the market.
I'm sorry. So basically what you're saying is that our mission statement is a way how we define our objectives and our goals, correct?
Right. So my mission statement, preservation of capital, and I've got a goal of what my total rate of return should be, and I have a goal that I'd like to exceed what would be more than just a passive investor by at least 2 or 3%.
And so in our trade plan, we want to also identify that style of investor. Like you said, some folks might be fundamentalists, or some are technical analysts, and like you said, others folks like dividends. So I know your style, but I would categorize it as a momentum style of trading. Would that be a fair assessment?
It's correct. I always want to be owning stocks that are having a positive total rate of return.
Right. So you kind of believe in that theory that stocks that are in motion will stay in motion, and that you like momentum because you feel that in a certain period of time frame, let's say 3 months or 6 months, those stocks that outperform during those periods will tend to outperform for longer periods of time.
Right. The old adage, the trend is your friend till it isn't.
To the bend at the end, right, Jim? Okay, so let's go through your process. So from your mission statement, now we need to start to think about how we're going to select or identify those stocks that have that positive momentum. And so you share with me this idea of a stock screener, how we can kind of go and look at the broader market and identify these stocks. So for folks that are following along here, what I've done is I've gone into under our stocks and our stock screeners. Now, again, at the end of the session, I will be sharing Jim's, stock screener ideas and his template ideas and his custom view ideas, but just so follow along with it. So I've saved Jim's stock screener here. So this is Jim's chart of the day. And Jim, just kind of walk through us. I mean, there's only 4 categories here in terms of about what you're screening for, but what are you screening for and why?
Right. I'm using Barchart's tools. And so the first thing I want to do is I don't want to be in the little small stocks that are so thin that I really can't make trades in them. So first thing I want to do is choose stocks that are traded on exchanges only. The New York Stock Exchange, Amex, and NASDAQ. I don't want to be in the over-the-counter or the pink sheets or anything like that, because I later on I'll talk about stop losses, and I can't use stop losses on those other platforms. So I want to be on a major exchange.
So, we're talking about active stocks, and we're talking about stocks that have decent volume and not penny stocks, right? The difference.
Correct. And then I want to be stocks that say are at least $500 million in market cap. Basically, we're talking about the Russell 3000 stocks. Okay, so stocks over 500 million in market cap. Now, next, I like Barchart's overall opinions, and so I'd like to find stocks that are trading above all of Barchart's opinions. So I like a stock that would have 100% Barchart opinion score. So I set my buy at 99 because it says greater than. It doesn't. I don't have a tab that says equal to. It's got to be greater than or less than, and so 99 gets me those stocks that are Barchart's opinion of 100 or more.
So folks aren't familiar with the Barchart opinion page. That is a technical analysis conglomerate of all technical analysis of short-term, medium-term, and long-term analysis, and they're basically trend-following systems. Where basically, what you want to see is you want to see all of them are showing a common interpretation of a buy signal, right, Jim?
That's correct.
Okay.
Next, I want to go ahead and look at the weighted alpha, which is more or less a weighted 1 year moving average. And the reason I picked 25 is, remember that I want a 12% return out of my portfolio. I'm going to be wrong half of the time. I'm going to say I'm going to bat 500. I'll be lucky. So I want to choose stocks that are beating it by about twice. So 25 or 24 is my weighted alpha that I'm going to use. And that allows me to find stocks that have current momentum and have had momentum over the past year.
But I think this is a really good point here. Stop here. So folks who are following along, listen to Jim, what he's saying. He's a longtime investor, and he's telling you already that in his system, he is designing his system for loss. In other words, he knows that in the reality of markets, that half of the trades he's going to find are probably not going to work out. So that's important for him to find these stocks that have good momentum, that have outperformed or are outperforming, so that when they do outperform, they're not only going to make up for the loss of the ones that aren't working, but also continuing to help his portfolio outperform. And then talk to me about this 1 month number of new highs and lows.
Sometimes the market moves in kind of jerky. I want a little bit more consistency out of it. Just because a stock will jump up 15% in one day, that's not good for me. I want a stock that's going to be steadily moving up. So there's normally 20 trading days in a month. So I want to pick the 1 month number of new highs greater than 9. So that's 10 to 20. So I'm picking stocks that have moved up 50% of the trading days in the last month.
Again, if you think about this, right, there's 20 trading days in a month, and then you're looking for a stock that's got 9 or 10 new highs in a month. You're basically looking for a stock that is literally making a new high every other day in the last past month.
Correct. So now I've got is a bar chart opinion of 100 or more, which that shows long-term momentum. Then I've got the short-term momentum by being the number of days in the last month. Now, one of the things that I like to do is on my screeners is set my parameters so I end up with the results being somewhere near 100. So if you saw today, what we basically did was we started out using Barchart's database, which had about 6,000 stocks in it. And then using the criteria that I look for in stocks, we came up with the best, we can see the results there, the best 69 stocks out of the 6,000. So we've done it down. You can do the same thing with dividends. You could do the same thing with revenue, earnings, anything that you want. But my suggestion is set the parameters on your screener to come up with a not more than 100 in your what will eventually be your watch list.
Okay, so Jim's screener is now giving us 69 stocks, and Barchart gives you a main view, technical view, performance view. These are default views for us. Here's some fundamental information. But the filters that were part of his process right here is the filter field. That's what's in the selection. There's your market cap, that buy signal, the percentage signal 100%, and then your weighted alpha and your number of this. So from here, Jim, now what we want to do is we want to start creating some custom views besides these ones that we use in the screeners, right? So you have a very unique set of custom views, right?
Correct.
So let's do that. So what I want to do here is part of Barchart, being a Barchart member or having a subscription to Barchart, is you can create custom views. And one of the custom views that I have here that I've saved is one of Jim's, and this is, as I call this, is our chart of the day custom views. And so these are the different inputs. So quickly kind of give me an idea of like what inputs you have put in here. I see a lot of them the same as your screener, but which ones that you start your process in terms of selection of the stocks that momentum?
We're down to 69 stocks, and I want to manipulate that list to figure out what are the best ones for today. So if you look at it, of course, we've got the current thing, the trading symbol, the name price. We've got the change for today. So column 1 is today's change. Then column 2, or the next column over, is the number of new highs. So we can look at those that had new trends in the last month. The next one is the trend seeker, which is a proprietary screener with bar chart that basically figures the 50-day moving average. The bar chart opinion, again, is 13 indicators from all the way from 20-day moving average on to I think a 200-day
200-day moving average, yes.
Yeah. The weighted alpha, again, is the weighted 1-year change. Then we've got the next column is the percentage of the 52-week high. So I can use that column to find out which one is trying to make a new high today.
So this is how far current price is in a percentage from
hitting a new 52-week high.
And you want to start looking at stocks that are starting getting closer to those 52-week highs, because your belief is that you can't make a new high without taking out an old high, right?
Correct. Then the next column gives me the change in the last 52 weeks. Again, that's the maximum I want to go out with my data is a year. Then I can look at the current 5-day change, 1 month change, 3-month change, and then we go out to the old golden cross, the 5,200-day moving average coincident divergent indicator. And so you can see that I can manipulate now my data any way I want, from today's winner to this week's winner to this month's winner to this quarter's winner. You can see I can really manipulate those 69 stocks. So what I like to do is normally come back to that column that's the 52-week percentage of high and use that. We can sort. Just click on it and it sorts that automatically.
So
Okay.
now what we're seeing here on these top 3 or 4 stocks is these ones are the closest to the 52-week highs. So this is kind of your process now, right? You're looking for those stocks that you've already determined momentum by using all these other indicators or these opinions. And now you want to see those stocks are getting very close to taking out. And I see a lot of stocks in here that are within 1% of the 52-week high.
That's correct. But now, remember, when we have this custom view like this, this is all raw data. It doesn't tell me a lot about getting a feel for it, because the columns say that has the bar chart opinion. I could have 2 stocks that both register 100, and one is on a 1% slope and the other one's on a 45% slope. So now I need a way to say, how can I look at the consistency of it? And that's sort of when I go then to my flip chart.
And so flip chart kind of gives us this quick picture of what price action looks like in terms of our charts. Now I have here just a standard chart, a candlestick chart, but you do have some unique templates. And again, at the end, folks, I will be sharing Jim's templates. So the first template I think we want to share is your moving average template, which you've told me before, which I love this kind of this description, is you like to see this kind of this ribbons of momentum, right? So we're looking at this stock. So walk me through that process. And then I'm going to take the liberty of, just picking out a few stocks that I actually looked at this morning based on these 69.
Okay. Now what I'm looking at is this, that I have the 20, 50, 100-day and 200-day moving average. Plus I've got the bar charts trend seeker, and then down there the volumes. Now when I look at this chart, I can notice that there's something wrong and why I wouldn't pick it. There's these plateaus in it, which means there's probably some activity. Somebody's going to buy it. Somebody's large trades. And you can see that every time this thing jumped, look at the volume down there. Somebody made a big play. So this isn't the type of consistent stock I like. I do like the way the moving averages come up and they don't cross each other. It shows me good things. Now, this is a stock that we all know, Clorox, a good bellwether stock. And we can see that Clorox has had a consistent move on up. The moving averages look good. It's trading above all its moving averages. It's trading above its trend seeker. And we can also notice that when we had big jumps in the stock, we had volume. So we can look down at that volume. And what I like about Barchart is it's kind of like a traffic signal. Green means go to me and red means stop. So I can see the days that it was trading on increasing volume with an increasing price, and days that it had decreasing volume with decreasing price. And so this gives me, this is when we turn, our screener was science data. Now we're getting to the art of looking at it, and the chart gives you a visual description of all that data we already looked at.
All right, so let's flip through a few more of these, but let's talk about this one briefly. So you see a lot of price movement on this one, but it seems like it's more movement on a one-day events. You kind of want to see stocks that are moving on a consistent basis, right? This one just had it's probably an earnings play or something going on here, but let's go through a couple other ones here. So this one here is, a little bit more consistent. And this is what you're kind of looking for, right? This making
it.
new highs on a daily or weekly basis.
Right. And notice that for some reason, the volume looks like it's ticking down somewhat.
So would this be a cautionary tale for you then?
Well, we're getting to a point that might be a cautionary tale. A lot of people aren't coming in and out of this stock, so it's starting to get a little thinly traded, but it still looks like a stock that I wouldn't mind buying and holding until my sell criteria or my stop loss kicks in.
I mean,
so
for a daily volume, it's only trading 36,000. I assume with you that you probably want to see, maybe closer to a couple 100,000 or, maybe even 1 million.
right.
So here's Merck.
I'll usually go through these.
A little ugly. Let's look at Lamb Weston. This is one that's kind of been in my portfolio, to be honest with you, in and out of my portfolio. And this one definitely has that kind of that, all the moving averages are turning positive, and it's one of these stocks that's continuing to make a series of higher highs, right?
Right, and notice if you look at the very current day, we can see that today we're hitting a new high. There's that little dimple above the price. Now go back all the way to the left, and you can see there's a little dimple there that it had its lowest price in the last 6 months. So there's always a dimple that tells you the highest and lowest it's traded on. This happens to be a 6-month chart, so it looks back there and says, this is the low price in the last 6 months, and this is the high price. So those little dimples kind of are an additional tool that Barchart puts on there that I think is very important.
So this one is actually one that it made your chart of the day recently. This is Coca-Cola Euro-Pacific Partners.
That's great.
And this is kind of really what you're looking for. They're looking for that steep angle of inclination in terms of your moving averages and price action. And, all of our moving averages are upsloping.
If you go back to when you first took plane geometry and you had the XY thing, this is what I'm looking for. Something that goes from the left-hand side and increases over to the right-hand side on a nice even slope. My ideal is a 45-degree angle, and this one's getting pretty darn close to it.
And then this one is another one of your chart of the days. This is a home builder, I believe, right?
Pulte Group. It's on a massive scale. We're talking about homes, $500,000 to $1 million homes. So it's in that they're catering to the people that normally have a little bit of money. They're not living from paycheck to paycheck. They've got a $500,000 to $1 million home, and that's their market area. And so they're not basically starter homes anymore. They're second and third homes of people that are a little bit more successful. So that's a good chart too. You notice the moving averages don't cross each other, and we've got that good trend seeker. And when I look down at the bottom, I'm seeing lots of good days where the volume shows that we had lots of good green days.
Yeah. So once we've found a stock, then what we can do is we can start gathering these good candidates. Now, you've told me that sometimes you might just jump right into the market, but we could put them into a watch list. And it's as easy as just going over the star here where it says watch list. And I think I do have a watch list for you. There it is, Jim's chart of the day. And we'll add that to our watch list. And we'll come back to that in a second. So let's move on. So now we've discovered a few different stocks. Talk to me about diversification. In other words, I might see a lot of these stocks that are doing, performing well, but they might also be, in the same sector, or the same industry.
Right. You want to make sure that we've got a phenomena that's kind of recent. In fact, Jim Cramer wrote a book on it recently. That is kind of funny that, like, we take the regional banks. All the regional banks seem to move in tandem together. They, surely there's some good ones and some bad ones, and you would think the good ones would be going up, the bad ones, but they all move together. So you don't want to get too many stocks in the same industry because they'll all move together.
What do you call that? Diversification versus
Worsification.
Oh,
Now,
that's it. Yeah.
the more stocks you get into your portfolio, if you go back to your old Statistics 101 course when you were doing sampling, every time you added a new unit to your sample, you were getting closer and closer to the what the whole universe was. So every time you add a stock, you're getting closer to the S&P 500 return to it. So there was a good study done by the College of Economics of London, and they found that the hedge funds that made the most money had the least holdings. And after they went through all kinds of gyrations, they came up with a very simple explanation for it, in that it's easier to get 10 good ideas than it is to get 100 good ideas. And
go ahead, Jim.
so
Sorry.
you don't want too many stocks because you want to make sure you can monitor them. And after you add, the difference in diversification between 10 stocks and 25 stocks, you're adding very little to it when you go beyond 10. In fact,
I think there's a study that was done by Harry Markowitz that the theory of portfolio risk, and he kind of talked about this. Somewhere between 15 and 30 is where you want to be, and there's actually been studies that says even at 9 stocks, then you start to eliminate or start to decrease that single stock risk, which is what you're talking about. And I have talked to you, and you said you kind of keep yours around 10 to 15. On my personal style, I try to keep around 20 stocks in my portfolio, in my long-term investment portfolio. So that idea of how owning less stocks that you can watch and manage, and getting rid of that single stock diversification. So I do want to ask you a question though: is if you are putting stocks in or taking stocks out of you, are you always fully invested, or do you take in consideration market conditions in terms of
normally
buying?
I'm fully invested, but every morning one of the first things I check is Barchart's market momentum, which tells me how many stocks are trading above each of the various moving averages. And I don't spit in the wind, so that if 75% of the stocks are trading below their moving average, maybe I don't want to get into the market at that time, because the odds of me making a good pick decline. As you can see right now, we're at a market that is, I can't find going out the 50, 20, 50, 100, 200 day move. They're trading less than 50%. Again, I want to show you that bar chart, the red and green. I'm looking at that screen, I'm seeing nothing but red. So I'm very cautious, and I may not be adding unless I find a very, very good stock. I'm looking at it and saying, right now, I don't even have a 50-50 chance of picking a stock that's going to beat this.
You're kind of swimming against the stream here, even though you might find a winner or a stock that has good momentum. It's fighting the overall trend of the market. In this case, what we see is, like you said, you see a lot more red lights than you see green lights.
That's correct. John, if you could go back to that custom view again, there was one thing that we forgot to add to talk about, and that is, notice that in my custom view, when I have a watch list or a portfolio, I also add in 3 indexes: the Value Line Index, the NASDAQ 100, and the S&P 500 indexes. And what that helps me determine is, am the active stocks that I'm picking, are we actually picking stocks that are better than the indexes? So, John, click on the 3-month percentage change, and we can see that where are our indexes. So we go down there and find out that our indexes all seem to be down toward the bottom. So the majority of the stocks I've got in the portfolio over the last 3 months have beat the indexes. And that's kind of what I'm looking for. I want to be beating those indexes. So no matter which one of these time horizon criteria you pick, just pick the opinion Barchart opinion column.
You're picking like this bar that you want your stocks to perform above. And again, this is kind of goes to the idea of, you want a stock that's going to be outperforming the greater market, because you want that winner also to outperform, those potential losers. So what you're using that is, I think the term is called benchmarking, right? You want to make sure that your stocks that you're picking are beating the benchmark, and you like to use these three ones: NASDAQ, the S&P, and the value line. Now, you do have a unique take on the value line in terms of, again, you look at this as a greater picture of the overall market, or in terms of what it reflects in your mind.
Yes, the reason I picked the value line is normally you and I will pick 10 stocks and buy an equal amount of each one. The NASDAQ and the S&P are market weighted. The value line is not. So it's 1,700 stocks, the largest 1,700 stocks, and tells me what percentage of them are trading above or below the total market. So that's why I like it, because it's more like my portfolio in that it's individual stocks as opposed to market weighted portfolio.
I think that's a great point, because if you look at, like, for instance, the S&P, right, and I think there's two stocks in the S&P index that make up almost, I think the number is almost like 50% of the gains in the S&P can be attributed to two or three stocks. So that makes a lot of sense, because you really kind of want to make sure that you see what the broader market is, and not just one or two individual stocks that could be distorting an index.
Sure.
So I think that's a great learning example for some of our new timers. Okay, so Jim, now we have a stocks, we've invested in them, and this is where I think a lot of investors fail, is because they do a job about picking the right stocks, or using their process again. But I think a lot of investors make a lot of mistakes in terms of they hold on to losses, or they hold on to some of these stocks that are not performing, and all of a sudden their portfolio that looked really good 6 months ago is now lost. So let's walk through your process in terms about how we can start looking at these stocks in our portfolio, and what are some of the things. Go ahead.
Every Friday, I take my portfolio and I go to this screen and I go to the Barchart opinion and sort it from highest to lowest, or I should say lowest to highest. Click it again, John, please. Okay, now what it's really saying is that according to the Barchart opinion, these are the lowest ranking stocks. I then have a screen that I like to look at, a flip chart. And John, if you can go to that flip chart that we set up, which was the sort of the risk one. Now, what this chart is, it has the 50-day moving average, the stock price, the 50-day moving average.
That's the trend line. Yep.
That's the blue line is the 50-day moving average. The trend seeker is the red and green dots, and it also has in it the turtle chart.
Turtle channels,
which is the highest price and the lowest price it's traded in the period. So go to the first stock, John. This is the index, so right now you can see that. Remember when we looked at the market momentum and we saw, the market is trading, the majority of stocks are trading below their moving averages. What this is also telling me is this is the value line index, which is 1,700 stocks, and you can see that line of the new high line is coming down, down, down. So this almost is mirroring that screen we just looked at. Now let's look at the very next stock in our flip chart, which was also the lowest one. And you can see this stock here is one that I'd say, this stock is not adding anything to my portfolio. So we're looking at, is this a stock that is likely to make my goal? Is this a stock that's not adding anything to my portfolio? And the third criteria is this a stock that is detracting from my portfolio? And I think you can look at that chart and say, you know what, this one, it's all three of those. It's not going to help me make my goal. It's not adding any positive to my portfolio. In fact, it's doing a negative portfolio. And that would be one I'd say, I'm going to sell that. I don't need this stock in my portfolio any longer.
So I love this. I think this is a very simple kind of way to look at the market. What Jim is saying here is, the turtle channels is basically showing you here is this stock that might have had positive momentum at one time. It certainly looks like it has sideways momentum, and maybe even starting to show negative momentum by the trend spotter. But also, now Jim, you say here's where you would say I would be a seller. So let's talk about your moving averages, your trend seeker, and these turtle channels. Where do you sell, or when do you sell, or is there a rule that you use that tells you when you should be selling these stocks?
Normally when I buy a stock, I put in a hard stop loss at 15% below whatever I bought it at. If I buy it at 100, I'm going to put in a stop loss at 85 and say that is mine. A stop loss is your maximum amount of pain.
All right, let's hold up on the stop loss. Let's talk about selling a stock that is now not performing in your portfolio. Which ones do you use? Do you wait for it to cross the 50-day, or do you wait for it to make a new turtle channel low?
When you sell, it's kind of a little bit more art than science. So I look at both the 50-day moving average and the trend seeker. And when I see both of those in negatives, then I'm pretty well wanting to get out of that stock because it's not adding anything to my portfolio.
Is there a dollar value or a percentage? Let's say, there's a technique called chandelier, where you look at the highest price the stock was at one time. You can see the stock was close to $185. Do you say, oh, if this stock gives back a certain amount, that I'm going to exit this trade? Or do you use that a value and a percentage, and then you look at that percentage as it relates to, say, your 50-day moving average?
No, I use it as to when I got in the stock, because as you can see, when I bought into it, so I'm not looking, it may be that I bought into it, but the real 52-week high was 4 months ago. So I don't want to look backward. I'm always looking forward. So I'm looking when I buy that trend and saying that the maximum amount of pain that I can take is 15%. And then afterwards, I'm going to use these other indicators to monitor as to, is it still adding value to my portfolio? And if it's trading above my 50-day moving average and above my trend seeker, it is adding value to my portfolio. When it crosses those, then it's not adding any value. And if it's way below both of those, then it's adding probably a negative impact to my portfolio.
Well, here's kind of my point. I think I'm a little confused, but what I've talked to you in the past, for instance, this stock made a new high around 185, and then it broke the 50-day moving average. That fall was about a 15% move from the top. Would that be a criteria for you? It says, hey, not only have I broken the 50-day moving average, but it's also now retraced 15% from the highest point that it was in my portfolio.
Well, yes, but remember, the first stop loss I put in is a stop loss that's based on my acquisition price. From then on, I'm looking at these other indicators to see moving forward what my new stop loss is going to be. And every Friday, when the market closes, I go back in and I evaluate my entire portfolio and readjust my stop losses. And my stop losses are always adjusted up, never down.
Okay, so here we are in Elf Beauty. This is one of your charts of the day. This is one that I just put in to the watch list just recently. So at this point now, what we see is, again, big difference in what the chart we just saw of the other one is. We see that our channel
Right.
is stair stepping up, right? That's a good sign, right? Bulls take the stairs. I'm sure a lot of folks have heard that. At this point now, you're okay. Let's pretend like it's Sunday night, and now you're going to say, all right, where would I put my hard stop or my sell stop?
I'd put it
And
right there at 81.
right here at below the 50-day moving
That's it.
average.
Yeah.
And then that's it. It's a simple rule. If the stock goes
Simple
below
rule.
there, it closes below, you're out of that stock.
That's correct. Now
Okay.
remember, a stop loss. You gotta. Sometimes you're on vacation. You're away from your computer. You can't monitor it every day. So that stop loss is what's the maximum amount of pain that I want, that if I went off on a 2-week vacation and the market tanked while I was gone, where would I want to be out? That's your stop loss.
So you call these kind of like these black swan events, something that you can't control or you're not around to, where you're the other examples where we show was more of a soft sell, using technical analysis. Here we're just saying, hey, if I wake up tomorrow and this stock is trading below the 50-day moving average and I'm away or I can't be in front of the screen, this is where I'm just going to protect myself against these sudden price shocks, right?
Right. Yeah. And in fact, if we went back a few weeks, we all were listening to TV and we were listening to these pundits on TV saying, you know what, every time the Fed moves the Fed funds rate up, that's good for the banks. And so we're also there believing, banks are where we want to be. When the Fed fund rate is going up, that means the spread they make between their investments and their loans, and it's positive for the bank. And then all of a sudden, bam, overnight, a black swan event happened. And we learned that, gee, what everybody was telling us was totally wrong. The Fed fund rate was having a negative impact on the smaller regional banks, and nobody saw it coming. That's why you want to have some hard stop losses in there, because events will happen, and that's why we call them black swan events. They're events that, if you listen to everybody, it came out and hit us out of the blue. We didn't expect it to happen.
So we always have a stop in as a hard stop, in other words, a black swan stop, but we might sell because of some technical criteria, and that could be unique to each individual trader. For instance, for me, I like to look at, swing highs and swing lows. Now, if I'm looking at this stock, which is kind of interesting, is, our most recent swing low here where the market paused and then took out new highs, also kind of corresponds with our 50-day moving average. Well, here I might tweak my stop a little bit and say, yeah, below the 52-week average, but the 50-day moving average, but below the swing low, that would be a definite I want out of that stock. And even if we go back to this swing low would be in line with the lower end of the turtle channel. In other words, telling us that in this look back period of 40 days, that's the lowest price that we've seen in 40 days. Probably another good indication to be out of a stock, right, Jim?
Yeah. When on my custom view, I have that one column that has the trend seeker. So when I see a stock that is trading below its trend seeker, that's kind of like my caution light is. That's the time when I say, oh, this stock, it's got some current problems. Let's look at it and determine whether or not we want to sell it or not.
You kind of put it on the secret probation list, right? You can check it out.
Yeah, then you look at it and say, oh, well, let's look at this. And you can see that right here, we had a time today where we are actually coming down toward our trend seeker. If you look way back back to January 3rd, you can see there was a time when all of a sudden the stock came and traded below its 50-day moving average, and I would probably have gotten out of it at that point. And then when I saw a few days later that it started trading now above it, I might have gone back into the stock.
Right. All right. So I see a great question one of our viewers puts up is, how do you set a target, or do you, Jim?
I I go to the trend is my friend till it isn't.
To the
Now,
bend at the end. You stay with it all the way until you get one of these signals that you've decided that technically the momentum of this trade is over. So you just want to hang on as long as you can, right?
sort of. Go back to the custom view.
Custom view. Let's see. I think would be under our watch list. Yep. Okay.
Okay. Now let's take that 1 month and go ahead and give it the sort. Give it a reverse sort. All right. Now what we're looking at is here's some stocks. Let's go back to where my
Go back to the flip charts.
benchmark is. Look, no, when my benchmark. See that value line? In other words, I'd be looking at where the value line index is. Draw a line right there, and everything above there is not beating the index. So there, I'm beginning to look at these stocks and say, okay, these have not hit. They have not hit my hard stop loss, but there's a possibility that I might want to look at them to sell them. And so now that we've put it in this, let's go back to that flip chart again. And we can see that square.
Right.
Okay, look at it, and you can see it started to come off there. And my chart was telling me that it was coming off of there. So there was one that has not hit it today, actually went through my stop loss. But you can see that by going back and forth between your charts and your custom views, you get a good feeling of what's happening to your portfolio. And you always look at the weakest stock in your portfolio and make sure that like I say, every Friday you reset your stop losses. And every day, if you do look at your portfolio every day, you sort it to say, what is the weakest stock in my portfolio by whatever time horizon you personally choose for yourself?
That's a great question. So time horizon, so we just stay to this 50-day, which is kind of represents 3 months roughly. Do you feel like after a 3-month or 6-month or a year period where stock is run and a nice run that you're a lot more cautious about a stock, or you just don't care? You just want momentum to continue, and once it changes,
as long as it's beating those 3 moving averages, I wanted to look at the value line, the S&P 500, and the NASDAQ 100. As long as it's beating those, I'm pretty well going to stick with that stock.
Awesome, Jim. All right, so let's. Do you mind taking a couple questions before we finish up here?
Sure, let's go ahead.
All right, so we get a question here is moving averages. How long do you hold on to stock for? And I think we kind of answered that. You hold on to a stock until the market tells you to get out. In other words, trend's your friend until the bend of the end, until these price re-engages or settles below, your moving averages. Your timeline horizon is the 50-day moving average. You like that one, right?
That I do. And again, we're looking at those 3 questions. Is it meeting my goal? Is it adding to my portfolio? Is it not adding to my portfolio? Is it negative to my portfolio? That's sort of the process you look at that stock.
So Richard asks Richard's one of our regulars. Hey, Richard. Richard asks a really good question. Do you change your process during earnings season?
I get cautious during earnings season. A good example of that was my chart of the day yesterday was Yum. This morning, but I picked it yesterday, and Yum. If you can click on it today, you can see that yesterday it looked great, strong buys, everything like that. And then what happened that it didn't exactly meet the earnings expectation, and it did have a little bit of a drop today.
Right.
Not a big drop, but enough that I'd be concerned. So I do get a little cautious during earnings season because I'm looking at the past. You can tell when you read my chart of the day that I do look at the sentiment from various sources And yesterday, every one of the sources was positive on this stock. They thought it was going to go up, but you can see what happened just overnight.
Right, right. So you still, if you were in the stock, you'd still be in it. But if you were looking at the stock to buy, you would say, well, now it's got to kind of jump that hurdle. And again, right, it's got to
Right.
start outperforming over the next, let's say, month or
Sure.
so. Okay. So
I
I
would
got a
have bought
question.
it yesterday, but not today.
Right. So I got a question is what does your average holding period come out to be? Do you know that by idea? Like how long is the average time you hold on to a stock?
I have held on to a stock for 5 hours. I've held on to stock for 2 years.
So you don't
there's
really,
there's
that's
no
not
average.
that's not a dynamic or a metric that you
No.
look at. You just
That top line here is going to tell me when I need to basically get out of a stock. As long as I'm having increasing new highs, I'm going to keep it. I did, as I shared with you before, John, I recently, when the day after all the regional banks hit the tank, I thought there was going to be a dead cat bounce, so I bought some uh, Federal Republic at 27, put in a stop loss at 27, moved it up a point every hour, and got out of it at 37. So I was in that stock for about 5 hours.
woo! A good
I
thing
would
you
not,
got out of
I
that
would not
stock, right?
recommend people doing that. It just happened to be that I had a hunch on a dead cat bounce, so I took a small flyer on it, and I got lucky. But I was moving that stop loss up because I knew that eventually it was going to pop it back down, and you saw what happened to it. It was trading down around 6 a couple weeks later, and then
Yeah.
went bankrupt.
Now
So
it's
that's why
not
I
worth
say
the
there is no
momentum.
average. There is no
Right.
average, but I am disciplined on. I don't. These people that I hear when you go to cocktail parties say, "Oh, I bought such and such, and it's down 25%." When it comes back up to what I paid for it, I'll sell it.
Right.
Why do you do that? Why do you do that?
It's just
That's
not it's
not my
not doing
philosophy
anything
at
for
all.
you, right?
Yeah, if it went down, move on because there's other stocks that you can find that are going to have a better chance of going up than the one that you just went down 50%.
Yeah. Plus, a stock that goes down 25%, by the time it gets back to that 25 where it came from, it's got to go up. 40% or 50%. It's got to have a 50% return to make back all those losses because of the difference in pricing. So you're talking about, oh, I'm betting now on a stock that's going to have, be one of the greatest outperformers in the next 6 weeks. Why
Sure.
not find those stocks that are outperforming and get rid of the ones that aren't performing, right?
Right. You look what we took 6,000 stocks and boiled it down to 69. Those are the 69 stocks that I want to look at being in, not
And
the
then
ones.
we looked at maybe we got this down to maybe a handful of stocks, right? All right,
Right.
so there's a couple more questions there I want to get to. Maybe I can answer a couple of these real quickly. So Dominic asks, do you use Bollinger Bands instead of turtles? And I know I talked about you, but those who don't understand the difference, turtles is basically just a look back period in terms of a highs and lows, where Bollinger Bands is based on a standard deviation. You don't use those kind of technical analysis, standard deviations, or let's say ATRs in your right. It's just about momentum for you, right?
Again, we're looking at, we all go to a restaurant and we order different things.
Exactly.
I happen to have picked those indicators that I'm comfortable with. I'm not saying Bollinger Bands is bad. John, in your charts, you use candlesticks. I don't use candlesticks.
Right. I use candlesticks and Bollinger Bands. So Dominic, I
Right.
think it's about the
So
style of trader. As long as whatever style you use, just be consistent and disciplined with that style. And I do like using Bollinger Bands because I do like when it shows me, momentum or as the market breaks out over a trading range. Let me do one more question, and then I want to move on. So I saw one, Eric, we talked about how Jim uses a trailing stop. And so Peter asked, do you use options to hedge your portfolio? Do you do covered calls at all? Maybe let's say you have a stock that's losing momentum that you still want to hold on to, but it hasn't reached one of those sell criterias. Do you sell a covered call, let's say at a higher strike price, that maybe we can gain a little income while this stock is trying to figure itself out?
No, I don't. But the reason I don't is because most of my investment portfolio is in IRAs and managed 401ks, so I'm not doing options in those facilities. If I had a majority of my portfolio in regular brokerage accounts, I might look at selling those. But because of where my money is, again, it's the individual taste. I'm using tax deferred accounts, and you can't go ahead and do a lot of the
Option stuff. So here's a great question: is so let's say you're going through your momentum process and you're looking at stocks and maybe not finding a lot of great candidates. You don't have a problem with just staying a passive investor and just going into a certain amount of ETFs. Is there any point in time where you might say, hey, you know what, I might just be all ETFs and not even look being an active trader?
Yes. And the reason I'm cautious is that I wouldn't be a passive trader. I would be an active in the ETFs. And by that, I mean, if I'm at a point where 90% of the stocks are trading below their moving averages, then I might want to look at adding to my portfolio a 2-year bond ETF or a precious metal ETF.
So
That might be a
diversifying
better-
your portfolio through other assets and not just
right. Because
equities.
if 90% of the stocks are trading below their moving average, then being in the S&P 500 ETF and the NASDAQ 100 ETF, they're going to be negative. But what might not be negative is precious metals, short-term bond funds, and sometimes we could look at the real estate ETFs as being alternative during certain periods, not during all periods, but certain periods I might want to be in the real estate ETFs.
I think that's a great learning point. All right, so Jim, I really appreciate the time that you gave us today, and I know that our folks learned a lot. I know that spending just time with you, I learned a lot from you as well. So I really do appreciate you sharing your trading plan, the simplicity of it, and your years of knowledge. So here's kind of Jim's outline of his plan. Right there's that mission statement, his screeners, and we talked about our custom views, then creating these custom charts and templates, and then using our flip charts to get that visualization, and then that being a disciplined algorithm. In other words, setting out a plan and then following your plan and being very methodical and disciplined about it. Do you want to add anything else to this, Jim?
Well, just that hunches and intuition usually get you in trouble. And that's why, back, I'm sure that in high school when you guys took the a primer of how to take the SAT, they told you your first choice, when you didn't know, your first choice was probably right, and don't go back and change any of your answers unless you really know 100% that you had the wrong answer down.
I think that's great advice. Well, Jim, thanks so much for spending time with us, and I hope that if I invite you back on, you'll come back on another time as well.
Thank you. I'd love to do that.
All right, Jim. Thanks a lot.
Thank you.
So again, here's kind of Jim's soft sell points. Again, these are slides that I have for you guys, so you can go back and look at this. And then inside of our slides, there's charts. Jim's screener. Here's his sell template. The criteria. Here's his moving average template. That kind of that picture, that ribbon picture that he likes. His custom views, and then his moving average custom views. So what I promised you guys before is, if you don't know how to create a custom view, you can go into our tools under custom views, and this is where you're going to create your custom views. If you don't know how to do that, there is a tutorial there you can use to help you find custom views. Another, if you want to create a watch list. Now notice here you don't see, excuse me, let me go to tools and watch list. get my glasses here. Yes, my watch list is. Right, notice there is no tutorial up here, but if you go into the help section, you can find a tutorial how to create a watch list or create a portfolio, as well as our chart templates. And also in our site education, underneath the learn section, there is a lot of tutorials that go through all the different tools that we have on inside of Barchart. Now, next week, let's go into our learning section. Is we see our webinars, our upcoming webinars, but if I go into archive webinars, and you'll see that today here is our Investing 101. If I click onto that, up here is where you're going to find those slides that you see for today. Okay, and let's go back to our upcoming webinars. Next week, we're going to look at Barchart page through the futures trader's eye, and what tools could be used for futures traders. And I'm going to, my background is more of a futures trader, so I'm going to give you a little bit of insight and some, trader's advice in terms of how I use Barchart and a lot of the different components. So this will be, again, for somebody who's interested in trading futures, or maybe has been trading futures. Great. I think this is going to be a good webinar. So let's go back to our charts. And again, what I said to you is one of the benefits of being a subscriber to Barchart is that you can have an unlimited amount of templates, watch lists, and custom views. If you are not, then Gene, what's it? I think it's 3 or 5 is the limited amount for a non-premium member.
Yes, it's 5 for a free member. Yes.
5 for a free member. So if you want to try out our premium membership, there's a 30-day trial, and you can create 100 watch lists or templates or custom views. I know that some of my custom views, I'm up to about 20 or 30 so far. So I do create a lot of custom views that are similar to what Jim is using. I don't know. Have I forgot anything, Gene? I think I covered everything I wanted to talk about today.
I believe so. The only other thing I want to mention is that if you have an unanswered question from today, please send an email to support@barchart.com. We have a great team of people that are happy and willing to help you out with your questions.
All right, Gene, thanks so much for monitoring for us. I saw a lot of great questions you pushed through. Folks out there, please be healthy, stay safe, and the good of all trading.